Alright, we are here live again today, trading the NQ on London session. It is currently 2:09 New York time. Alright, what are we looking at? So I have some areas that are marked out before starting this live. And one of the areas was this low right over here that just got taken out right at London Open, and the market just shot up right here. So right before open, the market went down to these lows right here, this green line. Took out these lows, you can see it took it out. And then reversed back up right over here to these highs. Trying to go for these right over here. Let's see if the market tries to reach for those highs. We'll have our markers there. Alright. Overall, since market open, since the day's open, market is actually currently flowing towards a bullish direction. Just taking a look at our dailies. What do we have here? So we have this fair value gap right over here, and this so daily highs from the last day right here. I've put it out. This right here could be our target potentially, and filling in this fair value gap right over here, which is this imbalance, which is a daily SIBI. Let's put this out here. Alright. You got the daily SIBI marked up right over here. So we can see this retrace back up to this gap, this SIBI right over here. Let's see what the market does. Yesterday was a bit of a choppy day. A lot of people lost money, but we still made some money yesterday, just because we were very tight with our plays. So the dailies, we kind of understand that this could be a potential area of interest. And we have these dailies high, this daily high right over here. And the market, since the day's open, has been trending bullish upwards right here. So actually, let's take these out. There's too many of them. So the market only took this low out, so we'll take this out. This is the hourly right over here. We have our highs marked up. This potential swing high here. This swing high here got taken out. There's a swing low right over here, another swing low here, and a swing low right over here. So this right here is our liquidity lines, where market can potentially grab these liquidities and potentially make its way up where it wants to. Again, this is all something that is not 100% always, but based on our research and our analysis, we can see that this is what the market could potentially do. So we look for the trades within these plays and this move where we can enter and make some money for ourselves. This low here. Here. This is over 30 minute. Took these lows right here. This is over 30 minute. Okay. 15 minute here. This is over 30 minute. Okay. 15 minute here. 30 minute. Okay. 15 minute. 15 minute. Let's go to a more clear chart. Let's open this up here. Let's go to a more clear chart. Let's open this up here. Let's go to a more clear chart. Let's open this up here. Let's go to a more clear chart. Alright, let's go back down on the 5 minute. 5 minute, we can see that. Let's go back down on the 5 minute. The market 5 minute, we can see that is sort of respecting this gap right over here. It did break, sort of respecting this gap structure towards the down end, but here it did rally right back up at London Open. Towards the down end, so rally right back up at London Open. Towards the down end, so rally right back up at London Open. We're seeing if this could right here be a potential reversal towards the down end. We're seeing if this or it could be something that could reversal towards fill right over here and or break these highs and potentially go higher. Fill right over here and into this gap. Break these highs and this gap right here. Go higher. So these gaps right here, think of them like this gap right here. You know, when you climb a mountain. So these gaps right here, think of them like and you know, when you climb a mountain, so these gaps you look for these little gaps where you can, you know, put your hand or put your Velcro or whatever you're using to climb the mountain to help you go higher. So these gaps are basically treated like that. To help you go higher. The market would fill them, then go higher, then fill another gap, then go higher. The market would fill the next gap after that. Then fill another gap, then go higher. So that could be something that we can do all the way up till the previous day highs. That we can do all the way up till the previous day highs. That we can do all the way up till the previous day highs. All right. All the way up till the previous day highs. All right. We're not in a rush to enter any trade. We are just watching. We're not in a rush to enter any trade. We are just watching. We're not in a rush to enter any trade. We are just watching. When we say day trading, it doesn't mean that we would day trade every single day. When we say day trading, because it doesn't mean that not every single day you'll have these opportunities to make money. So there's times where you just sit out and look at the market. Not every single day you'll have these opportunities because it's harder to get a read of what's happening. So there's times where you just sit out and look at the market because it's harder to get a read of what's happening. So there's times where you just sit out and look at the market because it's harder to get a read of what's happening. So there's times where you just sit out and look at the market because it's harder to get a read of what's happening. So there's times where you just sit out and look at the market because it's harder to get a read of what's happening. So there's times where you just sit out and look at the market because it's harder to get a read of what's happening.
I listened to a teaching by Larry Williams, and he mentioned he had a workshop that he did in person, and he called it the Inner Circle Workshop. So I was like, that's really cool, man. Inner Circle, that really resonates with me. Like, I want to
right
be
here
in the inner
respects
circle,
this.
And then when I actually got in the Inner Circle and learned how
so we have a
these markets really book,
SIBI right here that's being respected, and then we also have a BISI,
that was the birth of
bullish fair value gap right over here. Then we're going to see if this would disrespect this and this one right here and aim for these lows. And we can see if we can enter a trade on our short.
If you're on YouTube, subscribe to the channel and hit the thumbs up button. If you're on Apple Podcasts, make sure you leave us a review.
But see and wait for confirmation before we enter our trade.
Show a little, and then let's get started.
Mr. ICT, how are you?
Doing well, sir. How are you?
Doing really well. It's very nice to see you for the first time, and it's very nice to have you on. I know that we're just jumping on, but as a way of introduction, I'll just say I'm very happy that you're here, and thanks for making the time.
We don't have a lot of news today, but we do have a red folder news at 8:30, which is the core PCE, the price index, at 8:30 a.m. Other than that, we have consumer sentiment at 10 a.m. So we do have actually a couple news happening. So it could be a day where the market can move a little bit more on the upside, because I do see some potential for Friday close towards the upside to kind of make that weekly candle wick at the bottom. Okay, so the S&P is also looking bullish right now. ES is also respecting that 15-minute bearish fair value gap. I'm gonna see if I can switch my screen and show you guys. Let me see if I can. Alright, yes, let's, okay, so I don't think I can share it for some reason. Not sure why, but there we go. Yeah, so this is what I mean by the, see, you can see the 50-minute on the ES respecting the bearish fair value gap right here. You can also see on the YM, which is the Dow Jones, same exact movements happening, and the Nasdaq. The VIX, I don't know, I don't think it's really active right now. Okay, so let's move back to our NQ screen. All right, let's take me back to my old screen. Let's go. Not this one. No. Okay, so let's hide this and let's come back. We are back. Perfect. Honestly, the market is trying to figure out its move right now. Alright, so market is still a bit choppy. We are still waiting for our setup. As you can see right now on the 5-minute, we have not really, I don't know, we disrespected this bearish because we closed below it. But the market is still not really making its direction at the moment. So we're still waiting. We're sitting tight because on the 3-minute we see this one being respected. This one got disrespected. So the market is consolidating right now. And we don't want to get caught up in this chop. We want to catch some good moves and protect our profits. So I'm currently still waiting for something to happen where I can be a bit more interested.
The 50% extension, Fibonacci extension level. So that there, if we were just to exit at that point there, we'd be 2.3 reward to risk ratio. What does that mean? If you're risking 1%, maybe let's say $100 or let's say $1,000, you're making $2,300 on a $1,000 trade.
When we refer to elements to a trade setup, there's really just two primary concerns, and one is obviously context or framework surrounding the idea. In other words, what makes the idea favorable for a trade. There has to be something that builds a reason to want to do this trade. We're learning four specific principles, and then what we do in those conditions. What are we specifically pairing up with in terms of the ICT tools? The first one is going to be expansion. Okay, we're going to talk about expansion and what we look for in that condition. We're going to be talking about retracements and what concept we used for retracements. reversal, and lastly, consolidation. Now, each one of these four give a specific framework and a context to the marketplace that you're going to be trading in. Now, using these four criteria for context and framework to specific reference points in institutional order flow. The first one is order blocks. The second one is fair value gaps and liquidity voids, liquidity pools and stop runs, and lastly, equilibrium. Okay, so all markets start from a consolidation and move into an expansion. That means there's an impulse move or an impulse price swing. After that impulse swing, okay, either it goes back to a consolidation again, or it goes to a retracement. When the retracement happens, it goes back down into another level of expansion, or after the expansion, it can go to a reversal pattern. After the reversal pattern, it'll see another retracement, then back to potentially a consolidation. These four conditions, they interchange throughout the ups and downs and ebbs and flow of the marketplace. You just need to know where it's at right now, where it's likely to go, and where it came from. The main thing is the consolidation begins with everything. All the moves that take place in the marketplace start from a measure of consolidation, because that's where the markets are building orders. When the expansion occurs, that's when we get the clue as to what the market is most likely going to be doing. And then we wait for either a retracement or another consolidation or a reversal. Now, expansion couples directly with the tool of now an order block near or at the equilibrium price point. I'm going to show you that right now. Very clear defined the tool of now an order block near or at the equilibrium price point. I'm going to show you that right now. Very clear defined the tool of now an order block near or at the equilibrium price point. I'm going to show you that right now. Very clear defined the tool of now an order block near or at the equilibrium price point. I'm going to show you that right now. Very clear defined the tool of now an order block. Order block. Order block. Order block. Order block. Order block.
Alright guys, I just want to show you guys what just happened here. Market is currently moving towards these highs. The market is pumping, it's going higher. But what I highlighted here was a consolidation in this red box right over here. Now as soon as this green candle broke this high, we figured, okay, you know what, this is potentially where the market wants to break out towards, which is higher. It broke out higher here, and then it came back down, filled in this imbalance right here, this right over here. This red candle tapped into this down close candle before the expansion move. So market consolidated, then it came back down here, touched this down close candle, and boom, went right back up. So consolidation and then expansion. The market moves in 4 directions as the video is playing in the background. It goes to your expansion, retracement, reversal, consolidation. So we can get consolidation and expansion, then we can get retracement, or we can get expansion and then a reversal. It doesn't have to be in specific orders, but this is how the markets tend to move. Alright, no trades as of yet, but I can see in the 15-minute here that we are inside a semi. Sorry about that, guys. I just have to fix this up. Alright, whoops, that was my fault. I had a couple things playing at the same time. Let's take this out. Alright, we should be good now. Should be good actually. I don't even need this window open. Let's take this out. But yeah, like I was saying, we are respecting this 15-minute sell side imbalance, buy side inefficiency right here. So I am still going to take this out. I am still waiting. We haven't taken these highs out yet. At 3 a.m. which is also a London Open. The 2 a.m. is the ICT London Open between 2 and 5, but people also say it's between 3 and 6. So we still have about 1 minute left for that to happen. We can see this potential move towards the downside right over here. We created a swing low. Let's take a look at this on the 1 minute. Okay, let's take this out. And I'll just put this here. Alright, so we got the 3 a.m. open here. Alright, we see a push higher. If we go above this zone right here, this black line, then I think we are bullish because this is the 50-minute imbalance that was being respected this whole time, here and here. And it does look like we are trying to break that imbalance and disrespect it. As long as it does close above that, then I think I am bullish. But until now, we are seeing if it is just going to wick above it or is actually going to close above it. We can see it wicking back down, but also trying to push up at the same time. So let's see. We are still in a little bit of a chop right now. If I don't really see any setup, I might call it a day, but I will wait a bit longer and see if I can get some sort of play or just watch and see what the market is going to do. Alright guys, I will be calling it a day for now. I will see you guys for New York session, AM and PM. So tomorrow we can see what the market will do. We're hoping to see if the market will come back down to the previous day lows or go to the previous day high. It currently is trading at the equilibrium. So we don't really want to get too caught in this consolidation, but for now we are good. We will call it a day. I will see you guys earlier in the New York session. Thank you and have a wonderful night.